if I lost all my investments today, there are only two things that would help me recover from this setback. And in today's Invest With Me video, we'll talk about how will I earn my first million pesos after I lost everything. If you're new here, my name is Ron, and welcome to Pinoy Stock Investor. But before we start, these are not financial advice. Make sure to do your own research and consult a financial advisor or professional before making any financial decisions. Okay, let's start with how the market looks like. Today, Dow Jones is is up by 0.22%. The S&P 500 is down by 0.18%. Nasdaq is down by 0.40%. And let's see how does that translate to our portfolio. Main portfolio, we are down by 0.13%. And then the IRAs are down by 0.6%. Now, looking deeper inside our main portfolio, looks like the companies that are down are Alphabet, Google, Amazon, and Uber. These are the companies that's pulling down our portfolio. Right now, Berkshire Hathaway, Microsoft, Visa, and MasterCards are the only green in this portfolio. Okay. Let's see. Apple is down by 0.18%. Google is down by 1.39%. Berkshire Hathaway is up by 0.48%. Microsoft is up by 0.12%. I think Microsoft is a little bit recovering from its downturn earlier this week or earlier last week. Also, Amazon is down by 0.60%, which is the second highest on our portfolio. Visa is up by 1.9%. Uber is down by 0.30%. Uber has been going down for a couple of weeks now, and that started from their earnings report. And if you look at it, Uber is now on the research tab, the P/E ratio of Uber is at 15.69, which is, I'd say, not bad. The main reason why Uber is down is more competitors are popping up, and then this AI driving thing is also one of the things that's pulling them down, the self-driving taxis. And recently, Uber and Baidu are actually working together to launch the autonomous ride-hailing service in Dubai. So that's one good news. Okay, moving on. MasterCard is actually up by 1.18% today. Okay, so today we're going to invest $150. Actually $160 because we just received our first dividend from MasterCard. We received $10 last February 9th, and that dividends will make it work. We'll make him work now. Grab those dollars that he could get as prisoners and bring back to our castle. Okay, so we're gonna invest $160. Let's plug this in to our Google Sheet. All right. So for industrials, we're going to invest $25. For financial services, we're going to invest $11 per company. For communication services, we're going to invest $40. And for technology, we're going to invest $20.26 for each of the companies. So that's our guide. Let's start investing because it's 10:39. Market is going to close soon. Okay, starting with industrials. That is Uber on our portfolio. Let's buy 25. It says here $25, but I'm only going to buy $20 of Uber. So buy that $20 of Uber. All right, that is 0.271 shares of Uber. We have 0.271 shares of Uber right there. Next, we are going to invest on our financial services sector, which is Visa, MasterCard. We're starting with Visa. It says here we're going to invest $11.02, but we're only going to invest $10 to Visa. $10 flat. Okay. That is 0.03 shares of Visa. Okay? 0.03 shares of Visa right there. Okay. Now to our topic. Peter Lynch said, invest in companies that you understand, or invest in what you know. This relates to one of the things that we want to talk about, to earn your first million earn my first million if I lose everything today. I would consistently invest on things that I know. And these are things that I use every day. These are things that I understand. And things that I understand are the companies that I use their products on a daily basis. Example of this is Apple. I use a lot of Apple products and services every day, from my phone to the system that I'm using, or to the laptop that I'm using, to the place where I do my research and everything. So I'm really close, or I really understand that the more Apple sells their products, the more Apple get more customers to use their products, the more market share they get, and the company gets more revenue, or their revenue increase because of the stickiness of the product. Because if you're using their ecosystem, it's really hard to switch to a different kind of ecosystem once all your products, all your work, all your documents, everything, photos and everything are saved on their ecosystem, and the ease of use. If you got used to it, it's hard to shift. So these are the kind of things that you understand. These are the kinds of products that you should be looking at to invest in. I mean, since you're owning their products, might as well own like part of the ownership of the companies, right? So for me, that is Apple. And if I lose everything and I want to earn my first million pesos again, I would start buying consistently this company. I would increase my position. I would buy whenever I can. And doesn't have to be daily, doesn't have to be weekly, it depends on what kind of time interval you have. I would just keep increasing my position in these companies, because consistency builds result that is really hard to fake, and it works best on companies that you know, or if you invest in what you know or what you understand. No, you stick to the business that you actually use. You understand how they make money, and you don't invest in based on feelings. You invest in on schedule. You invest on the schedule that you set for yourself. You just consistently invest in that company every day, every week, or every month that you have money to invest. You ignore those trends that you cannot explain, those market noise. You check if those market noise is a long-term kind of news or a short-term kind of news. Would this news affect the thesis that I have for this company on the short term or on the long term? Because if it's on the short term, my investment would probably go down. But if I keep and constant on my investment, and I'm consistent adding money, investing, buying these companies, it would pull down my cost basis and it would increase my position in these companies. And then when the short-term news dies down and it starts going up, I will have a better position or a better investment. Don't try to let these market noise take control of your actions. Take control of my actions. I won't let them take control of my actions. And these familiar companies makes it that consistent investing is easier, like way easier, because you understand them. And time in the market does all the heavy lifting, because if you're constantly investing, the longer you invest, the greater the compound effect is. And Einstein said that the compound effect is the eighth wonder of the world, which it is. And it doesn't have to be just one company. It can be multiple companies, because you use multiple products every day. Whenever I'm paying something, I use my cards, and my cards are like MasterCard and Visa. So I have invested in MasterCard and Visa. I do Google search every day. I use Google products every day. So I'm also invested in Google. These are just examples. You can see whatever's around you, whatever, and understand whatever companies or products that you already use, it's available for you. And you just have to learn about them. You just have to research about them. You just have to invest in them consistently. And that's one beauty of it. You're not limited into any companies. You're not limited to one company. You're not limited into one option. You have a lot of options. You just have to be consistent about it, about your decisions, about your actions. Okay, let's now continue investing and see where we're at. Nice. Okay, next is MasterCard. So for MasterCard, we're going to increase our investment in MasterCard because we're trying to build our position in MasterCard. Okay, so buy MasterCard, we're going to buy $20 of MasterCard. Yeah, I know it's already going away from our guide from the Google Sheet, but we can always adjust something or from somewhere. Like whichever company that I think is a bit expensive for my taste today, I will just adjust the price or the suggested investment, and I will pull from that and put it to what I want to increase my position in. Like right now, I'm going to increase my position in MasterCard, and I'm going to buy $20, even though it's only set up for $11. Okay, that is 0.036 shares of MasterCard. Okay. See that? 0.036 shares of MasterCard. Next. Do a refresh to see which ones we already bought. Okay. And next is communication services, which is Google. We're going to invest. It says here we're going to invest $40. But this is where we're going to pull some of the amount that we put into MasterCard earlier. I'm only going to invest $35 in Google. All right, $35. So 35. Okay. That is 0.109 shares of Google. Okay. See? 0.109 shares of Google. There you go. Next is our technology companies. Before investing in our technology companies, we also have Berkshire Hathaway here that we didn't invest in yet. So like before, Berkshire Hathaway is on, I treat this as a ETF in my portfolio because of the amount of companies that Berkshire Hathaway has been holding, or that they've been holding. All right, so let's start with Apple. So Apple here, we're going to invest. They're currently down by 0.10% today. And we are going to buy, it says here $20. I'm only going to invest $15. So $15 in Apple. That is 0.054 shares of Apple. We still have a total of $61 to invest. And we only have 3 companies left to invest. Supposed to be it's 2020, so 2021. But I'm building a position in Amazon, and right now Microsoft is really down, and it's great to buy some shares to increase our position. So I'm only going to invest $15 in Berkshire Hathaway. Okay, that is 0.029 shares of Berkshire Hathaway. Okay, before we move on to our next company that we want to invest, a couple of weeks ago, the S&P 500 went down negative 2.41%. And I am part of this Facebook group, and it's about investing. One of the group members says that, oh, what are you guys doing? Are you guys selling out? Is it the bear market? So there are a couple of people who did panic, and they're trying to get consensus of what other people or what other investors are doing. And another side of this is that other people are trying to encourage them to buy. Like they keep quoting Warren Buffett when he said, buy when there's blood in the market. And this shows that some people only chase the hype, they panic sell, or sometimes they chase whatever's shiny in the market, and they base all their investment decisions through emotions, which is a really not good combination. Investing and emotion are not a good combination. This is where the secret sauce that I'm going to use if I lose everything to earn my first million back. I would be disciplined to keep my emotions in check and follow the rules that I set when it comes to investing. Because discipline protects you from your own emotional mistakes. Whatever the market is doing, I will follow what rules I set for myself. Especially if the market is going down because of a short-term news. It's a really big mistake to exit a position just because everybody's selling off. And it's also true on the other side. You don't want to buy companies just because people are buying it. You follow your rules even when the fear is loud and when the news of shiny things are very high. You plan to stay intact during these market chaos. And this is where you build the tolerance, the discipline when it comes to investing. I remember back when it was COVID, the market dropped all the way down to 30%, approximately 34%. the S&P 500 were approximately down by 34%. And I remember what I was doing back then is I was looking up my thesis and see and checking it if that bump or that down market is changing what my thesis is when it comes to the businesses that I'm holding. And guess what? I kept buying more shares of the companies that I'm holding. I stayed true to my investments up to now. Actually, I've been holding Apple, Microsoft, and Berkshire Hathaway since back then, and I just kept buying them. I just kept increasing my positions, buying them, not because they are low and not because there's going down and I can get to increase my position. It's because that the news that were, or the things that were happening, or the news that were being shared back then doesn't really affect my investment theses or my investment decisions. I kept my emotional control. I kept my emotions in check. I kept my emotions separate from my investing decisions. And I think that's one way that would help me build my first million if I lose everything, all of my investment, and I have to start it. I have to restart my investment. Okay, let's go back to our investing. Next is Microsoft. Today, surprisingly, they are up by 0.02%. So we're going to buy shares of Microsoft. We still have $46, so we can split it evenly, 23 for each companies, and that's what I'm going to do. So we're going to buy $23 of Microsoft. That is 0.055 shares of Microsoft. Next is Amazon. This is the last company on our portfolio to buy today. And we're going to put everything in Amazon that's left. 24.06 shares, or $24.06. That is 0.116 shares of Amazon. I wish I'm able to buy 24 shares of Amazon in one buy, but that's going to be expensive for me. Okay. So that pushed our portfolio, or the main portfolio, by $150 more. And we are now in a total of $188,882. Okay. Time plus consistency plus discipline compound real milestones. I stayed consistent even when the result is slow, and it did give me a reward today. And I will do that again and again if I lose everything today and I have to restart. I'll stay consistent. I stayed disciplined when emotions tried to interfere in my investing. I didn't let emotions and investing be in one room. I kept true to my own rules, true to my own criterias, and I kept my discipline to follow these rules. And it did reward me of really good returns today. And if I lose that returns and I'm back to zero, I will still do the same separation of emotions and investing, and being disciplined to follow the rules that I set for myself. And definitely let time do its magic, because time is the best compounder when it comes to investing. It definitely does magic, and it does the heavy lifting if you just stay consistent and stay disciplined. If you get value in this video, don't forget to subscribe and like this video. It's free and it will definitely help my channel. And let me know what you think about this Invest With Me video today. And if you are part of that group that I mentioned, let me know down in the comments and I will definitely give you a shout out on the next video. So have a great day and peace.